Well, we're wrapping up the third week of the trial of Sam Bankman-Fried, the former crypto billionaire facing a slew of fraud and conspiracy charges. Now, the trial centers around allegations that Bankman-Fried knowingly took money from FTX customers for his hedge fund Alameda Research, lying to both investors and lenders in the process. Now, testimony this week sought to outline where the funds were used between the two companies and how much Sam Bankman-Fried had in their allocation. Witness highlights from this week include former FTX engineer Nishad Singh, who testified he committed crimes alongside Bankman-Fried. Singh also said he frequently expressed concern to Bankman-Fried about Alameda's, quote, excessive spending. Specifically, cost endorsement deals that included $150 million to the MLB and more than $200 million for the naming rights of an NBA arena. Well, joining me now is Terrence Young, Swan Bitcoin Managing Director. Terrence, obviously a lot to unpack here, but I do first want to start with FTX clients, customers, supporters of SBF. What did they learn about where their money and their funds went?
Unfortunately, they learned that since day one, basically, the FTX funds were sent to Alameda to use for whatever Sam Bankman-Fried and his cronies determined were optimal for them. So this included the naming rights, but also political donations, investing in startups, and doing just a lot of things that you would not expect that you as a customer of an exchange would have your money being spent on. They're basically gambling with client money, and it's criminal. So it looks quite bad for SBF. And I was very disappointed in the defense lawyers, this organization, and lack of counter narrative. They seem quite unfair.
And so why do you think this is the approach they're taking here?
So I wish I knew. It is not a good day for America, I have to say, when deca billionaires or former deca billionaires who realistically have money stashed away. I don't believe that Sam Bankman-Fried was a total altruist and only gave money to others and took none for himself. He lived in a $30 million home with roommates that he chose and overrode his coworkers. So when even wealthy people can't get a good defense, that's not good. One possibility is the judge did jail Sam for witness tampering, and that might have been appropriate. What is not good is if Sam did not have adequate time to work with his lawyers to prepare for his defense, because there's no counter narrative. The lawyers got many terms wrong and would cross-examine and have cross-examinations blow up in their face. They repeat questions. The judge was pretty irritated and told them to stop doing that multiple times. So that's one possibility. Another possibility, I think, is that he is in denial, probably, about what happened and did not help his cause much by not giving his lawyers the full picture.
And it's tough because, we're obviously hearing from his inner circle here as well about what they knew and when. What were some of the key things that came out there? I mean, even we're getting information about the DMs that he was sending to reporters about lobbying.
Yes. So some of the things that came out was that his general counsel, a Yale grad who worked at Davis Polk, one of America's and the world's best law firms, had no idea what was going on and was lied to by Sam until the last week of FTX's existence before they filed for bankruptcy. He resigned the next day. This lawyer, Can Sung, had asked Sam and others, there's an exception in the terms of service for Alameda. Are we diverting customer funds to Alameda? Can Alameda just borrow kind of unlimited amounts? And was told no by Sam. So that's one. We also learned that much of the money, according to the forensic expert, who seems quite credible, worked on Enron and so forth, that was pretty devastating as well. He said that the money was just used to prop up a lot of other players in the crypto industry, not 100% in every case, with Celsius and BlockFi,
Right.
but a lot of these others, it was used to prop up or buy out, for example, Binance and CZ, who had a 20% stake in FTX. So it's just a lot of pretty damning testimony, I would say. And I also found Nishad
So, Terrence,
saying, yeah, go ahead.
because you mentioned quite a few companies there, so I wanted to make sure we get in sort of the domino effect, the impact that comes from how this is playing
Yeah.
out. Obviously, when we look at Genesis, what this means for regulators trusting some of these crypto leaders, what do you think are going to be the long-lasting effects of how this is playing out?
I think the crypto cleanup continues, and crypto, meaning not Bitcoin, gets cut down to size, maybe 90%. A lot of this stuff will go away. There's just been a lot of fraud and abuse, pump and dump schemes with alternative coins that have no value, and they're just scamming the US retail public. Bitcoin, I think with BlackRock, Fidelity, Invesco, Franklin Templeton, all applying for a spot Bitcoin ETF. I think Bitcoin will be fine and survive. Short-term Bitcoin could take a hit. I was actually surprised that the New York AG, when they filed yesterday, Bitcoin's price shot up anyway. And that's usually a bull market indicator. On bad news, the price goes up anyway, and that's continued to today where Bitcoin briefly crossed 30,000. So I'm very bullish on Bitcoin. I'm very bearish on other coins.
And certainly a lot of people are coming out of this with a lot more skepticism, especially after the fall from grace from SBF. Appreciate you joining us this morning. Terrence Yang, Swan Bitcoin Managing Director. Thank you so much.